Hey there, Ed McCormack here, founder of the crypto education platform, dChained. Before we start this video, if you haven't already, subscribe to this channel, pound that like button, keep telling your friends and family. We appreciate all the support we keep getting in helping us grow this channel. So that being said, not a day goes by where someone doesn't ask me, do you think crypto is going to get regulated? How does it fit into the compliance world? Is this going to be something that really is going to combat big banks? And the fact is that we're fortunate to have really the most powerful person in all of the investing world sitting on the stand in front of the House of Representatives this past Tuesday to cover all of that. And we're going to talk about how Gary Gensler addresses what the future of crypto holds in the U.S. regulatory environment right now. So before we jump in and talk about what Gary Gensler, who's the chairman of the Securities Exchange Commission, had to say about cryptocurrency, let's take a trip back in time and talk about a similar scenario that the U.S. economy was facing about 25 years ago. It was December 1996, and at the American Enterprise Institute, the chairman of the Federal Reserve at that time, Alan Greenspan, made a very famous quote when addressing the surge in overall valuations on digital e-commerce websites. And he made this comment called irrational exuberance. And he was talking about how he felt that the market was way overvalued, propped up by all of these tech firms that really didn't have much commercial value at all, and eventually it would collapse. Now, while you could give credit to Alan that he called it, he was more than 5 years early in that. And if you had listened to Alan Greenspan at that time and sold, you would have lost a considerable amount of money that you would have kept on the table for others to swipe up and profit off of. In fact, if you pull your chart back and you look at the overall stock market, just the S&P 500 since December 5th of 1996, and you look at the prices through today, we've never had the S&P go down to that same price level at any point. So in 25 years, the market has been higher than the S&P closed on that given day. So it just goes to show, that regulators, while they have extremely, credentialed backgrounds and they, have storied careers, they're humans. And oftentimes what happens is that, judgments are made either through political pressure, simply not understanding this, new disruptive force, or just simply they're put in a position where they probably can't admit that the system that they've built their entire livelihood on could ultimately be shaken up by this new incumbent. So with that being said, Gary Gensler, who comes from a phenomenal pedigree, in fact, he was a professor at MIT and talked about cryptocurrency in many of the classes that he taught. So you're talking about someone with a deep, deep background in this particular field. And among the many topics that he covered with the House Financial Service Committee, there were many representatives who had questions regarding cryptocurrency. And Gary Gensler did not mince words. And what we're going to talk about are some of the key points, really starting with the fact that does the SEC have regulatory control and authority over cryptocurrencies? Now, this might seem like a no-brainer, but it's really not. If you've been watching the news lately, you'll see that there's a bit of a turf war going on. The Commodities Future Trading Commission, which oversees commodities such as gold, oil, wheat, they are staking a claim to say, well, the SEC has already passed that Ethereum and Bitcoin are commodities. And we'll talk more about what's the definition of a security and what wouldn't be called a security in a moment. But they're saying, well, by that definition, then you should also, transfer that classification to other digital assets. And they've come out pretty aggressively in saying that the SEC should not have any authority over digital assets, similar to how the SEC does not oversee any currency or foreign exchange. Now, the SEC, on the other hand, outside of their current lawsuit with Ripple, which is XRP, it's also come out that the SEC actually filed an investigative subpoena against Circle, who is the backer of USD coin, USDC. So they have been very aggressive in really trying to ward off any encroachment by other regulatory groups within the government today. The second thing that he addressed, which I thought was really fascinating, was the definition of security as it relates to digital assets. And he pointed to this definition that draws its origins back to the Supreme Court case that was judged in 1946. It's called the Howey test. And basically it goes like this. If you are going to raise money, if you're issuing a coin and you're raising money where the investment community fully anticipates that they'll make a profit at the efforts of someone else, that's a security. And by definition, that is very broad and far-reaching, but inevitably, that is the definition of what a security is. And that's where you see the differentiation between gold, which is not produced by a single entity, and people are not investing knowing that this mining company is really going to add this extra value, nor are they doing the same when the U.S. government is issuing dollars or in Japan the yen. You could see the difference. One is controlled and really managed by a select group, and through those efforts, the value of that investment appreciates. And ultimately, what Gary Gensler is saying is that in that definition, you could apply that to the vast majority of digital assets today. In fact, he said that roughly 5,000 to 6,000 assets that are in existence at this moment, almost all of them would be considered a security, which brings us to the third question here, which this is a big one. Exchanges. So the places where we go and buy these securities. Now, we've already covered really those centralized exchanges. You look, whether it's Coinbase or Robinhood or E-Trade, eToro, firms that have a central location, a headquarters, live in the jurisdiction of a North American country. These are firms that are highly regulated, and in fact, not just at the federal level, but at the state level. He's not talking about those. What he's talking about are decentralized finance platforms, and including the third parties that facilitate those DeFi transactions. And what I mean by that is, one of the websites that you can connect your wallet to in order to do a transaction. What Gary Gensler is alluding to is a precedent that was ultimately created about 20 years ago here in the US, where it was ruled that at that time, peer-to-peer lending platforms like LendingTree and Prosper, they were facilitating loans. They were acting as lenders. And as such, both of them had to issue as broker-dealers in the United States. And this is where Gary Gensler is coming forward and saying it's time that any of these DeFi platforms stop hiding in Malta or Seychelles or Hong Kong and actually, just come to the SEC and register. Now, what was interesting, though, was there was a representative who drew a little bit of a question around motive, because he said, do you think that more DeFi platforms will come forward if there's a guarantee that there'll be no retaliatory actions taken against them? Meaning, can you guarantee the SEC, in the good faith effort made by that DeFi platform, is not going to press charges against them? And he didn't answer. So nevertheless, it's going to be a very interesting next few years as the SEC really wraps their hands and heads around what digital assets are, and ultimately tries to ward off other regulatory groups within our government who want to really take control and ownership of overseeing this whole new asset class. Because at the end of the day, when the rubber hits the road and presidents come, presidents go, if you just look at the number of banks who have planted their flag in the ground and really are now standing behind digital assets and really putting their reputations on the line, and more so, their customers' money on the line, it gets to a point where these banks are not going to let it just flounder and fail. They have way too much money to lose. So it'll be very interesting to see how the Federal Reserve, which is comprised of many of the banks that are involved with cryptocurrency, ultimately weigh in and have some influence on some of the monetary policies that exist, especially around digital currencies such as central bank digital currencies, like digital yuan, potentially down the road digital dollar, etc. So in short, the future is bright in crypto. It's easy to forget this is a 12-year-old asset class, and this is going to mature both from a regulatory standpoint, from a volatility standpoint, and overall adoption as well. Give it some time, enjoy the fact that you're early, and please, until next time, happy and safe investing. I'll speak with you soon.